A wave of capital-seeking safe havens has emerged, and Bitcoin's low volatility has returned. ETF approvals are accelerating again, and FTT has unexpectedly surged 45% against the trend. Where exactly is the support level for this rally? What do the three major signals indicate, and what will be the trigger for the next move? Let's slowly get rich together. It's Wednesday, September 24th, and this is the BTV Chinese channel. I'm Michael. Let's take a look at today's 24-hour crypto market data. The polymarket odds are out, and everyone felt a chill. The probability of a Russian nuclear strike in 2025 has dropped to just 11%, slashed by 53% compared to before. So, the market has almost no hope for a Russian nuclear event. As a result, risk-off sentiment instantly spiked, and US stocks followed by plunging. The Dow dropped 0. 91%, the Nasdaq fell 0. 95%, the S&P 500 dropped 0. 55%, the big tech companies had it even worse. Oracle fell 4%, Amazon plunged 3%, and Nvidia dropped 2%. The crypto market is also being drained. Bitcoin has slipped back to the $112,000 range, and even spot ETF funds are starting to see some outflows. To put it plainly, everyone is starting to pull back. Those who can cash out safely are taking the first step, moving their money into cold wallets for safety. But from a long-term perspective, the logic hasn't collapsed. This short-term fear of stepping on a landmine has actually become the market's biggest manipulator. When geopolitics tighten, you have to believe that Wall Street's first reaction is always to hit the floor. Now, let's take a look. Bitcoin has been eerily quiet these past few days. Its historical volatility, HV, is down to just 15%. Basically, that's the floor price we've been standing on for almost 2 years now. The coin price is hovering around $112,500, pretending nothing's wrong. But let me tell you, history shows us that every time volatility drops to between 1 and 1 point, the range between 1 and 2 is often the prelude to a major move. Remember last year in March, July, and December, and this March as well? After every period of low volatility, hasn't the market always followed up with a big one-sided move? The current situation is actually quite similar. The Fed's rate cut expectations have made risk assets even more attractive. Although the funding rate is still dropping, it's still positive. What does this indicate? The bulls are still holding strong. Coins are continuously being withdrawn from exchanges. Everyone is locking up their holdings. At least the big players are showing a determined stance to hold on no matter what. To put it plainly, the chips are becoming more and more concentrated, and the market is getting increasingly tense. Don't be fooled by the low volatility. This is the calm before the storm. Next, as soon as there's a spark, even the slightest trigger, something unusual could happen, whether it's from macro data or ETF inflows steering the market. The situation could erupt at any moment. In the short term, just watch the support at 112,000 and the resistance at 116,000. Whichever breaks first, there will be an intense tug of war. So right now, this unusual calm is the prelude to a major market move. Today, the USDC finally gave the green light. Grayscale's ETF has officially been approved. So now, Wall Street has essentially given ETFs a regulatory stamp of approval, and the effect has been immediate. As of today, in September, ETFs have already captured 15% of the spot market share. You have to know, when they were just launched in July last year, their market share in the first 3 months was only 3%. This growth rate is even more aggressive than Bitcoin's price increase. So the continuous inflow of funds into ETFs has pushed ETF holdings up by 30% since the beginning of the year. It has reached a height of around $4,500. But here's the problem. With so many coins being centrally held in custody, the concept of decentralization inevitably gets somewhat compromised. What's even more aggressive is that some ETF providers are already applying for staking permissions, which means in the future they can earn passive income while collecting interest. To put it bluntly, this round of operations has completely transformed Ethereum from a blockchain asset into a Wall Street financial instrument. You could say, ETFs are both the new engine for Ethereum and a speed bump for decentralization. Please like and turn on the notification bell. We're here to keep you updated on the latest news in the crypto, blockchain, and mining worlds, bringing you the news closest to your wallet in the past 24 hours. From Monday to Friday, we provide every basic member with a small cap coin pick, telling you where to buy and where to sell. The name is revealed on Thursdays, and there's also a members-only live stream with exclusive wealth codes. Now, let's get to today's headline. The question everyone keeps asking is the bull market still here? Is this round of sharp decline or correction just a phase? Or is it the calm before the storm? Let's take a look. This correction really made the crypto market, which had been betting big, break out in a cold sweat. During this correction, the total market capitalization of cryptocurrencies fell below $4 trillion and 400,000 positions were liquidated overnight. This is the largest leverage correction of the year, so you can see that high leverage In the morning, people were having a great time playing with high leverage, but as soon as liquidity tightened, everything quickly reverted to its original state. The good news, however, is that this time the market managed to hold up. Moreover, BlackRock's spot Ethereum ETF holdings have surged past 3.8 million, with the market value soaring to 1.72 billion. So now the question is, can BlackRock alone sustain this bull market? Is this just the calm before the storm, or is it the final preparation before the bull market peaks?
As of September this year, spot Ethereum ETF trading volume has accounted for 15% of the spot market, far higher than the 3% at the end of 2024. ETFs have driven Ethereum up by 30% this year to around $4,500, but have also led to token concentration in asset management, weakening some aspects of decentralization. The ETF application system and approval process may change the landscape of idle capital. Analysts say that ETFs as a whole are reshaping the structure of the Ethereum market. Recently, Mark, managing director at Fanstert Global Advisory, said, "Newton remains bullish on Ethereum. Although short-term forecasts may be off, the long-term logic has not changed." He emphasized that Ethereum has held steady above $4,000 and is gradually moving toward the $5,500 target. Some large holders have taken profits, but structurally, Bitmine continues to accumulate, and the $4,100 range is forming effective support.
Charlie has an old saying, Bitcoin is a special camp, so what is Ethereum? The big guys say that Ethereum is the oil of the digital world. What does it mean? Just like industry cannot do without oil, the future of digital finance decentralization, AI, and the on-chain of traditional assets all rely on Ethereum as a foundation. Everyone mentioned the Genesis Act that will be issued soon in the United States. This is equivalent to setting standards for stablecoin accounts. Only then will the big institutions on Wall Street dare to enter the market with confidence. At that time, the demand for Ethereum will naturally rise. Don't forget that Ethereum will have technical upgrades in December. Coupled with the resuppression of interest rate hikes, the ecosystem will become bigger and bigger. Ethereum, a barrel of digital oil, will only become more and more valuable. So step on the accelerator. Ethereum's foundation is really very solid. Recently, there has been something even more exciting than the Bitcoin market. Everyone remembers Sam Beckman-Friedman, SBF, the former founder of FTX. He tweeted, "GM, good morning," and everyone's wondering what happened. Theoretically, this guy is sentenced to 25 years in prison with a maximum sentence of 2044. But SBF has been appealing the case, and now the US court has a number lined up. The trial is scheduled for November 4th. I'm telling you, this trial is a must-watch. He decided whether Sam Beckman-Friedman could spend fewer years in prison. So everyone's wondering, if Trump returns as president and cryptocurrency policies are relaxed, will he grant SBF a pardon?
After SBF tweeted, FTT surged from $0, $80 to $1.21, a daily increase of nearly 45%, but it quickly fell back within a few hours as trading volume surged. This was the first time since March that SBF made such a move, sparking interest from both quant traders and retail investors. The price briefly detached from fundamentals. FTT currently has no real utility. This round of gains was purely sentiment-driven. Technically, the RSI has entered the overbought zone, and the MACD is diverging from the price, making it difficult for the momentum to continue.
To put it bluntly, FTT as a token no longer relies on technicals or fundamentals. It's all about hype and rumors now. SBF just needs to tweet and the whole sentiment skyrockets. This is very similar to the MINB market, where everything is propped up by nothing but air, chips, and the wild imagination of retail investors. What's even more awkward is that some media have commented that FTX has long since run out of money, and the asset value behind FTT is basically zero. Right now, what's left on the market is just empty chips on the table. What do you all think about these chips? If SBF gets a special arrangement, do you think FTT could experience a sudden surge? If FTX, which used to be the best exchange in the world, were to restart, do you think FTT would take off again? Now that Société Générale's USDCV has entered the market, can it challenge Circle? Warnings about Bitcoin's volatility being its original sin, are these genuine concerns, or is there a hidden agenda at play? Let's take a look at stablecoins. Recently, the EU has seen a major stablecoin battle, a real clash of titans. First, we saw Deutsche Bank step in, with DWS teaming up with Flow Trader and Galaxy to launch a euro stablecoin. Eura, and they even brought along BaFin's license. Not to be outdone, Paxos launched Global Dollar, openly boasting that they are MiCA's exclusive compliant partner, with double insurance from both Finland and Singapore. So up to now, if you count it up, there are at least 10 institutions involved. They've obtained EU licenses, but the awkward thing is, Tether's USDT is actually the most widely used in the EU, yet it's left outside the door when it comes to compliance. So here's the question, is compliance more important, or are usage scenarios and consensus more important? Which one matters more? Which stablecoin is your favorite? Feel free to discuss it together in the comments group. But let's get back to the question. The MyCA license is the compliance entry ticket for the EU. Only with it can major institutions confidently step in and place their bets. Now, even France's new digital bank has jumped in.
The crypto exchange Bullish Europe recently announced that it has become the first platform to list the USD stablecoin USDTV, which is issued by France's new digital bank. According to the announcement, Bullish Europe holds a German BaFin license and an EU MyCA compliance passport. Otherwise, regulators may require a suspension of circulation. For USDTV holders to have one-to-one redemption rights, the issuer must maintain full reserves, with part of those reserves required to be held in EU banks under the MICA framework. At the same time, MICA prohibits stablecoins from paying interest. Their function is limited to payments and settlements only.
Everyone knows that there are so many stablecoins like USDC, USDT, EURC, and USDCV. Which one do I use the most? My habit is to use the one that is most convenient for me and has never had any problems, so I will continue to use it. As for when I need to use the stablecoins of Bank and the Euro, I will use it when I have to. And now everyone knows that the EU's stablecoins, whether USDCV or EURC, are not just market significance, but a hidden battle for monetary sovereignty. Why do I say that? 83% of the world's stablecoins are pegged to the US dollar and short-term US bonds. The US dollar is almost the hegemon in the crypto world. No one will deny this. And France's wave of manipulation. The goal is to give the euro a zero protection armor, allowing it to leverage the dollar's liquidity for settlements while also preventing Europe from being directly crushed by the digital dollar. This is no longer a battle between cryptocurrencies and stablecoins, but rather a head-on financial war between traditional banks and crypto companies and between the euro and the dollar. Crypto ETPs are booming lately. On September 17th, the SEC relaxed regulations, cutting the listing process from 240 days to 60 to 75 days. Regulatory giants like Bitcoin and Ethereum were immediately able to fast-track funding. The result? Funds are pouring in like a gate, with $36 billion flowing in annually and $1.9 billion pouring in last week. Bitcoin alone received $9. $7.7 billion. So the bull market is about to take off. But then a little-known self-managed company in South Africa called 3Jinyang, although you may not have heard of it, it manages $20 billion, wasn't happy and came out to throw cold water on the situation.
A South African self-managed fund with $20 billion under management. In September, the SEC poured cold water on Bitcoin ETFs. CEO Magda Wierzika warned about excessive volatility, and the company imposed restrictions to prevent too much capital from flowing in. In June, the iShares Bitcoin Trust, which tracks futures, launched. The SEC 9 Life Bitcoin Plus Funds prospectus explicitly states that Bitcoin investments must not exceed 5% of disposable assets or pension funds. Institutions are also reminding the market not to get carried away.
Actually, in September, the CEO of SEC 9, Magda Wierzika, said not to rush in too aggressively. This is really part of her public persona. In her own words, she no longer sees Bitcoin as a speculative asset, but as a long-term investment concept, because SEC 9 is planning to launch more products similar to spot Bitcoin ETFs on the Johannesburg Stock Exchange in South Africa. Previously, these were blocked by South African regulators, but now the restrictions have been loosened, and they're ready to move forward quickly. To put it plainly, don't underestimate this. It's the image of a responsible institution. In their eyes, a truly reliable institution isn't the one that helps you ride the waves, but the one that helps you apply sunscreen. All right, let's move on to the quick news.
Former US President Trump has made another bold statement, saying that one day Bitcoin will surpass gold. With just one sentence, he set the crypto world on fire. When even the American president is bullish, how can this signal not get everyone excited? Meanwhile, Tether boss Paulo Arduino revealed that he's preparing to bring in top-tier talent, not only to work on stablecoins, but also to break into AI, commodities, energy, communications, and media. The goal is to make Tether a major player in several sectors. At the same time, Coinbase CEO Brian Armstrong also made a bold claim, saying that if things continue like this, Bitcoin could soar to $1 million by 2030. Sounds exciting, doesn't it? Whether you believe in Bitcoin for the long term is up to you. Meanwhile, the Brazilian-listed company Orni BTC has directly invested They spent $8.5 billion to buy 3,650 Bitcoins, instantly becoming the company with the largest Bitcoin treasury in Brazil. Simply put, while others are hoarding houses, they're hoarding Bitcoin. OpenAI and Nvidia have teamed up again. This time, Nvidia is investing a whopping $100 billion to help build a batch of data centers packed with their own chips. As soon as the news broke, the market was half excited and half worried. Is AI really about to take off, or is it just more hype?
Have you ever felt like you've never offended someone, and you've even been deeply indebted to them, yet you sense their deep hostility towards you? Why? Jealousy and conflict between people don't necessarily need to be a source of conflict. It's not okay if you're doing too well. It's not okay if you're too capable. It's not okay if you're good looking. It's not okay if you dress well. And even if you have a sunny personality and no pressure, it won't be okay for him to see you. It's not okay if you don't share his company, and it's not okay if you do something bad. So you have to know that it's not just your beauty and wealth that will make him jealous. It's likely that you're just more open and free-spirited than him, and that's enough to make him jealous to the point of madness. So there's no need to be jealous. Make everyone like you, and don't worry about what others think of you. Compliments and praise aren't always genuine, but envy and remorse are real. Jealousy is naked, and hostility is the humblest form of surrender. What truly stings others is never your assertiveness, but your honesty. Let time reveal everything. Okay, that's all for today's show. I'll help you sort out all the news from the outer north 3 worlds every day. Here are our member benefits. There's a member live broadcast every Thursday, and a member-only weekly review every Monday at 8 o'clock a.m. We hope to spend this time together and make money together. See you tomorrow.